Hello, everybody. Hello. What's up?
Hello.
Welcome to Hobby Live.
Hi,
Welcome to this.
Branson.
Yeah. Hey, everyone.
See Branson
Hey,
there.
Prof Lee.
Hi,
Hey, Prof Lee.
hi.
Yeah. This is a very special episode dedicated to the annual report published by the Huobi Research. And the name of this episode is Global Crypto Industry Overview and Trends. Ask Me Anything AMA. So today we are very happy to have various big crypto leaders here, big guys here. So I'm gonna introduce all of us to you first. So I'm Johnny. I'm from Huobi Research. I'm a cryptocurrency researcher at Huobi Research. I do a lot of crypto analysis and also do a lot of researching on crypto fundamental analysis and also look on different crypto strategies, investing strategies, and that's what I do. And then we also have another host here, Benz. Hey, Benz.
Yeah, hi everybody. My name is Ben, senior analyst at Huobi Global. I'm here for 2 years already. So I was initially from a traditional finance role, and I joined Huobi 2 years back. And currently, what I do is almost similar to Johnny. So I mainly do market research for DeFi projects, as well as I do AMA sessions with Johnny as well. Yeah.
We're very happy to have invited Edmund from Nansen, Branson Lee from BAS, Blockchain Association of Singapore, David Lee, Professor David Lee from Singapore University of Social Science, and also Minion from investing GBV Capital. And today, all of us, I think we are all crypto enthusiasts, and we're going to discuss a lot of exciting topics. For example, we're going to go through some macro stuff, overviewing 2022, how's it going in crypto, and then we're going to talk about some influential events, some big things, for example, the FTX meltdown, 3AC, Lunar, all of that. And then we're going to cover some of the DeFi as well, because I believe Nansen will be very happy, and also his experience in doing a lot of DeFi research and his insights will be very helpful for our audience to, have a more complete understanding of what happened in 2022 in DeFi. So in the last session, we're going to discuss something about SocialFi, because that's I think a little bit new topic here, because we haven't seen a lot of growth in SocialFi, but I believe that will be a big thing in 2023. So without further ado, I would like to introduce Edmund from Nansen. Hey, Edmund, how are you doing?
I'm doing good. Thanks for inviting me. So my name is Edmund, and I look after the research team in Nansen, and we are an on-chain data analytics platform. And my team sort of looks after or tries to sort of marry fundamental analysis with on-chain data.
Very cool. Thank you, and thank you, Edmund. Branson, how are you doing, Branson?
Hey, I'm good. Thanks for inviting me as well. My name is Branson. I'm from Singapore, Blockchain Association Singapore. Prior to this, I was also doing a couple of things, which is running exchange, security token exchange, and then some enterprise blockchain applications. Yeah, happy to be here. Yeah.
Thank you, Branson. And we also have Professor David Lee. Hey, Professor David Lee, how are you doing?
Yeah, John, thank you very much for having me here. Always a great pleasure to be on Huobi webinar. I'm from Singapore University of Social Sciences. My main interest is in research, building ecosystem. I wear many hats, and I work with different governments as well. So that's what I do.
Yeah, that's very cool. I heard that some of Ben's friends were actually your students, right, Ben?
Yeah.
That's very cool.
Yeah. Just too many students. Sometimes good every time they will remind me which year they are from. Just too many of them every year. So many from different universities: NUS, NTU, SMU, and Shanghai University of Finance and Economics. I always welcome anyone who are my students to remind me who they are.
That's very cool. And also have Minion from GBV Investment Capital. And yeah, how are you doing, Minion? You got a special name, and also you have a very cute NFT out there.
Hey, yeah, thanks for the invite.
Yeah.
So I'm currently helping GBV Capital based in Hong Kong, just sort of on the investment also research side. So I was also early day, like last year, 2020, I was also part of a Huobi as well. So but currently just
Oh.
basically researching and all those things.
I was late to join Huobi, so I didn't meet you back then.
Oh, right.
We should
right,
meet up
right.
later. Yeah,
Yeah,
we should meet up later. That's very cool.
Yeah.
So yeah, I think our audience have know us or know all of us now. So without further ado, I would like to just kickstart the conversation of today. Let's start with the first section. Hey, Benz, will you take over the first section? Thank you, Benz.
Okay, so I think the first section is roughly on the macroeconomic background. Currently, what's going on in the market, what market are focusing, backdrop like quantitative tightening in the US. So I think the first question will be directed to Professor Lee. Like, can you give us like your insights about crypto as an emerging economy from a traditional economic perspective?
Yeah, thanks, Benz. I think it's a very interesting year, and we're going to go into another interesting year in 2023. If you all remember, there was a crisis in 2008. And because of that crisis, a subprime crisis, a global financial crisis, that we saw that the huge interest in Bitcoin. And that's where the white paper was written in 2008 and 2009. The problem spilled over. I'm seeing a lot of same signs that is coming through. We can see the interest rates, they will continue to go up. That is not a very good sign. A lot of people think that by June next year, it will be the end, but I'm not too sure. Because this inflation has got leaks, and if inflation is the gauge, then the reason why inflation has got such long run that we are seeing through is because there's a lot of onshoring. Everybody is bringing back all the factories to their own country, especially everything to do with computer parts, which is one of the major trading items in the world. So if that's the case, the labor cost is high, supply chain is high, shipping cost is high, inflation will continue for quite some time, 2 to 3 years. And interest rate will continue to go up. That's the first sign. And you're really seeing that some of the REITs are being hit because the market has always been going up since 2008 as the government keep printing. And this is what Satoshi has been talking about since 2008, that we need to look for an alternative currency. And that is Bitcoin, right? And that was the beginning of which just remind ourselves why we're all interested in the area is because that we are concerned about the macroeconomy and the economies is running out of ideas of how to solve all these problems. And I can tell you that generally a lot of countries can't create jobs. Whether a lot of graduates are coming out in countries and they're finding that they are not getting the jobs that they want. So that will continue. And we probably will see the same thing as 2008. All the signs are there. It's tightening. We didn't have the tightening because they start printing to solve the problem. People will start losing faith in some of the currencies that we see, the fiat currencies. Some of them will start looking into high interest rate. There will be unemployment. People may see major collapse in the traditional market because most of the asset classes are, in my view, is bubble. Whether it's stocks, whether it's equities, whether it's fixed income, and fixed income is huge leverage. You're talking about crypto, there's leverage. The leverage in the fixed income market is unbelievable, right? Because of the risk parity asset allocation strategy they're using. So, and real estate has gone up quite a lot. So there's another worrying sign. If any of this start to collapse and any countries get affected, any banks that start to collapse, I think we will see all the interest back to Bitcoin again.
Yeah. Actually, I want to raise another question. Professor Lee, you reminded us that we are actually seeing signs of the 2008 crisis happening again. You mentioned something about, as we all know, the Fed are raising rates, and then the economy is not looking good, supply issue. And from my perspective, because I'm very new to the economy, and also for the crypto is actually a new product in the traditional economy. So how would you view this new product, new economy? emerging from the traditional finance, and are we going to get through this crisis? How will it look like when the bubble burst? And can you imagine what is the fate of our crypto community?
This is just the beginning. We started in 2008, right? And this is just 2022. And this year to me, is not the crypto winter. This year, to me, is a year of awakening, because a lot of people who came into crypto in the last few years, they have not read the white paper of Satoshi Nakamoto. They don't really understand why we are in crypto. That's one. So it's a very good time for them to understand what Web3 is about, what problems we are trying to solve in crypto. Peer-to-peer value transfer is just a peer-to-peer information transfer like internet. So we have created a whole new ecosystem that is going to lead us to a virtual economy. That's the only economy that the government can rely on to grow the economy. They cannot grow the economy using the old physical from like finance or from manufacturing, from commerce, logistics. They find huge difficulty to do that because they've tried everything, and the only solution was to print. And now they find that it's not time to print anymore. Everybody lose confidence in the fiat currency, and therefore they have to think of a way to grow, and it's the only way is the virtual economy. So you look at all the government, they are rushing to build the digital infrastructure for every country, from CBDC to digital trade agreement, and a lot of other international cross-border transactions, remittances, and so on. They are rushing to build all this infrastructure, hoping, like in Korea, they have the metaverse government. In Japan, in June, they passed the metaverse law to have a twin economy, that the virtual economy can drive companies like NVIDIA, can drive companies like all the tech companies that we are looking into, and bring them into the virtual world so that we have a twin economy to grow. So the virtual economy is on top of that, but it cannot be growing without the crypto. So what we are looking now is just the beginning of the demand for crypto. It is not a crypto winter. It's awakening. People beginning to realize how important crypto is. And people who don't understand, of course, they have never written a single line of code of a smart contract. They will think that this is of no value. Don't listen to them. They have never written a single line of smart contract. They have never dealt a little bit of DeFi at all. So they live in the old economy, and they cannot understand how difficult it is to grow this virtual economy without what we are having now, all the technology that we've built in the ecosystem. So don't be despaired. It's just the beginning, and it's just a awakening for everybody, including those who came into the industry in the last 3 years. But we have been around since 2013, 2012, and we have seen a lot of up and downs. So I'm very bullish on the sector, because that's the only way we can grow the economy.
Thank you very much, Professor Lee. So actually, I do agree on several points that you made. Like,
I'm sorry, Benz. I think you have some connection problem there. Let's just, I will just take over. Actually, I want to respond to your point. I find it very interesting because a lot of us new crypto bros, I would say, some other names for us, we are actually very scared of the collapse that we have seen in the past few months, especially the FTX. We had actually a trust issue. And then this crypto winter has been very difficult for us, and therefore I would feel that your point of view is really special when it comes to you're saying that we are just the beginning, and you're just very bullish and also optimistic. That's very awesome. Hey Benz, you here?
okay, I'm so sorry. I think my Zoom crashed on me. So just now I mentioned that I'm going to with you on a few points regarding like 208. Where hello, can you hear me? Hello.
Yes, okay. yes, we can hear you. Go ahead.
Okay, so in 208, this. Okay, I think it's good. Okay. So
Yeah,
back in
go ahead.
2008, the US economy had this, they rose the interest rate to around 3.5%, and then market tension sets in, and and then after that the economy collapsed.
I'm sorry, Ben. I think we lost you here.
Yeah.
Yep.
I think
okay.
you guys continue. I think you guys continue.
Yeah.
Sorry.
Maybe I can add something.
Yeah, sure, Branson, go ahead.
Yeah. So first of all, I think I agree with Prof Lee, and incidentally, Prof Lee was also my professor. So yeah.
Really?
Forgot, but
What a coincidence.
Yeah.
What a coincidence.
Yeah. Prof Lee has been around for a while, so he's known in the circle, and I really respect his view, and I totally agree with him. And the other point that I wanted to make is also that the if you look at the printing of the currencies, that's the first part. And if you look at the second part of it, which is that the US actually seized the US treasuries from Russia. I think that is a big testament to the fact that some of these currencies, the fiat currencies to be exact, are not as free or as dependable as you think they are, right? So I think that caused a lot of countries to actually sit up and notice this, right? And again, coming back to Prof Lee's point, which is that we have to go back to the original vision, right? What are we here for? Right? I think that's the important part, which is the debasement of the currency, and also whether there's trust involved in all these things. And as was demonstrated, I think obviously a lot of things can happen in the currency space. Yeah. And yeah, so that's the basis of that. And of course, coming back to crypto, is that to Prof Lee's point as well, a lot of things are linked. Even the equity market, there's a bubble, of course, and crypto is not spared, right? So if there's a sort of shift from the risk sector, which is equity and obviously crypto as well, then crypto will be affected. Yeah, but I'm also very bullish on the sector, and I think the important point that I want to bring across is that don't look at all the noise. Look at what people are building and what are some of the real, true innovators trying to do, right? And if you really believe in the industry, this is just the start, right? I think the future is really, really bright. Yeah. Thanks.
Thanks, Branson, for reminding us that the original value of why we participate in the crypto community, and that's a very good point. Yeah. Vance, you're back here.
Yeah, I'm so sorry, guys.
Don't worry about it.
Crash on me like whenever I want to do streaming. So yes. Oh shit! I think it crashed on me again.
Okay.
You can still hear me, right?
Yeah, we can still hear you.
Okay, so one more thing is regarding like the printing of money. If you see the invest M2 supply, right? Even though like they have been increasing interest rate for the past maybe 1 year, almost 1 year, M2 supply only dipped a little, just a little. It shows that their conventional monetary policy is not working anymore. Hence, we moved a lot of central banks moved to digital currency. So I think it is one of the way out to actually solve this problem. So hence, I think Professor Lee might be right on this. Yeah.
Okay, talking about M2 supply, I will actually share a research finding from our annual report. So let me just switch to that former very interesting chart. Can you see me sharing the screen? So can you see the picture here? Global M2 deviation from trend. You see here? And we're observing that the market cap of the whole cryptocurrency is actually correlated to the global M2 supply. So what we tend to think about this trend is that when banks start to print money, and then the money will flow into the risky assets, including the cryptocurrency. And we are now at the bottom. I would say the bottom because we're just normalizing the index of the global M2 deviation, and then we are seeing a historical maybe 4 years per 4 years. That's actually a quite low point, and we're actually want to bring out this chart, and let's see what you think about it. Yeah. Yeah. So what we try to say here is that Professor Lee and also Branson mentioned something about printing money, right? And that actually also caused the exponential growth of the crypto as well. And we also want to want to be reminded that actually the halving is very close to us soon, and it's happening in 2024. And therefore, in my opinion, I think we might be seeing a local volume forming maybe in Q2 of 2023. And yeah, just my personal opinion.
It's actually very interesting what your graphics are saying, that the deviation of the M2 trend. Your trend is it trending up or is it trending down? Was it a straight line that you detrend them, or just a change that you have that number there where it's correlated with the crypto market cap? Yeah, because we go. John, would you like to respond to that?
Yeah. It's actually we are measuring the deviation of the global M2 supply from its original trend. So when it pumps more money into the market, the trend goes up. It's not actually the total amount of money printed into the market. It's actually the speed, I would say, the velocity of money being created into the system.
Yeah. So actually, I'm quite surprised that there's such a correlation, because I would have thought that there'll be less of that in the beginning. I can imagine why in the recent years it's much closer, but in the early years of 2012, it doesn't make a lot of sense to me in the beginning. Maybe over the last 3 years we can see a lot more institution participation, and therefore, from the banking sector spilling, the excess liquidity spilling into the crypto. But I'm just taken a little bit surprised when back in 2012, 13, 14, that is spilling into it. I suspect that there is a little bit more spurious there. My point is this: what we are seeing in the last 3 years is we indeed seeing a lot of institutional interest, and therefore the flow of that credit into our crypto. So you take off that trend, we are still better off than maybe 3 or 4 years back. You just look at the prices of the crypto.
Exactly.
So, yeah. So my point is that you have to actually look at the long-term trend of some of the major crypto item. We developed an index called CRIX as well, that although it's come down, but I just feel that there will be always up and down, but it's still on a upward trend. But the danger of looking at market cap is because there are a lot of other coins, right, which is outside the top 20, top 30, that when the crisis.
Raise a good point. We
just wash them away. It's good. Actually, it's good that we wash them away, because they really they have no value. So we really need to focus on the top 20, 30, or maybe top 100 that really have some utility or function in that. So my point is that we focus on those, like Branson was saying, we focus on all those crypto that build the ecosystem, rather than entice people to come in and speculate on them. But when you focus on those that people are building, and you can see that all the NFTs are being listed, you see some of the interesting DeFi, you're seeing some of the supply chain that will require, or documentation that require open blockchain, a combination of then I think we capture the growth of what we are talking about. Then all those, the trend is this way, but of course there's overshooting that we saw in the last 18 months, and it's just coming back to the trend and overshooting on the downside, because there will always be people shorting the market. And when that's over, in the beginning of next year, we take a look, people do a short covering, and they will start looking for things to buy. The portfolio need to diversify. Then you'll see them coming back and back to the long-term trend. But we need to focus on those coins and tokens that can actually contribute to the ecosystem. So that's my point. Maybe only about 50 to 100, but we talk about whole market cap. Some of them may be useful, but they still die off because there's no interest. I bought into a lot of the coins that go to zero. 90% will go to zero, but doesn't really matter to me because they contributed to the building of the ecosystem. They're like staircase. We step on them, then we go up. So even they go to zero, but they have brought the market and the ecosystem to the next level. So we got to think along that way that we must not be afraid to tell people that we invest into this area in projects. 90% of them fail, 95% of them fail, because the 5 projects is going to bring us huge returns, right? But we never know beforehand any of the project out of the 100, which one will it be? Because 2 of them may be competing. One is slightly better and the other one goes to zero. That is very common. So don't be shy. You have invested in something that 90% goes to zero in this area, innovation investment, but don't speculate in the sense that make sure that you really understand what they're doing. A lot of people just follow everyone else and invest. No, my advice is that go study the project deep, right, and see how you could do that. They may still go to zero because no interest. It's okay. Let people know it goes to zero, but never leverage. So it doesn't affect your day-to-day life. But when you make it, you're huge. Okay, so that's my comment.
Thank you, Professor, for reminding us that sometimes taking the whole market cap might not be very accurate because there are some actually trash projects out there. And to my surprise, professionally, your risk tolerance is very much higher than I think a lot of guys out there, and that's very interesting. Yeah, very great.
I think the things why the risk tolerance is high is that there's no leverage, right? A lot of people like to you have $100, you put into 100 projects, $90 goes to zero, 5 remain there. So $100 you have $5, but that 5 have gone up 1,000%. Becomes each one. So $5,000 plus $5, $5,000 and $5, but you started with $100. That's the way to play the market, right? It is not like, okay, I like this project, I put it all in and then I leverage, and then what if it's the 90 projects that we're talking about? No matter how good in finance, anything that can happen will happen. So you don't bet more than $100 that you have, but you must be very good in doing research. That 5 will give you 1,000% return.
Thank you, Professor Lee, for giving us such an amazing investing strategy when it comes to picking some good gems out there. I think
it's the kind of investment advice that a lot of people of our generation needs, right? And also to no leverage, and most importantly, do your own reading, right?
Yeah. Thank you, Ben. And I think we should move on to the next part. And our report also highlights the most top 10 influential events happened in 2022. And I would actually like to invite you guys, maybe just pick or maybe 1 or 2 to discuss which one do you think had the most influence and had the most significance in 2022. So I'm at 4 first. In my opinion, I think that's the FTX incident because that's the biggest thing in 2022. I wonder what your view.
Maybe I'll go next side. For me, it's the Ethereum merge from proof of work to proof of stake. I was actually in the live YouTube, watching the merge and while it happened, I thought that was quite exciting for me because for once, we actually, to give you an analogy, we are like swapping out the engine, right? While the plane is flying, which is a tremendous feat by itself. And kudos to the team for pulling it off. Yeah. So I think to me, that's the highlight for me. Yeah.
Thank you, Branson. The Ethereum merge definitely big thing, technology breakthrough in 2022, and most of us have been waiting for a long time. But I just want to raise a point that, a lot of us, some crypto bulls at the time, were expecting the price of Ethereum to pump a lot during the merge event, but it didn't happen. Just a side joke. So Edmund and Minion, I wonder what your views. What do you think about the most influential thing that happened in 2022? Would you like to share your view with us?
I'll probably go, guys. So I think I guess extensions on Tornado Cash really. So essentially like the privacy debate on and also the regulation part as well. So which say for example looking back a bit on 3AC Terra, and also FTX drama. So these people still out there, but the Tornado Cash developer is still in custody. So he's just basically written a piece of code which is open source, and still in custody. So which is kind of is debatable. So I think on sanctions on Tornado Cash is essentially I guess a very sort of really negative sort of effect on crypto industry in terms of the privacy, and also in terms of I guess the regulation aspect as well. So I guess I'm still looking forward to the future of the privacy tech on blockchain, but it just set a really bad example in terms of we as an industry just sort of I guess pushing the privacy sort of tech or privacy sort of human rights in a way towards in the future.
Yeah, I agree. The decentralization value has been compromised when it comes to sanction on Tornado Cash, and that's definitely a thing that the crypto community would definitely not like to see. So, Edmund, I wonder what your view on the most important, maybe the most significant thing that happened in 2022 in your perspective.
Yeah, I would echo what OX Minion just mentioned as well. I think the sanctions on Tornado Cash was really I guess an understated watershed moment for our industry as a whole. And I guess the response or reaction of a lot of participants, it felt like maybe people don't really realize the implications that it actually provides, the sort of overlooking the virtue of decentralization and having a more centralization sort of force taking hold in the industry is goes against what the original ethos of why we're here in the first place. But then apart from that, I think the collapse of Terra was probably the main highlight or the main event for me this year. I think it came back off a euphoric 2021, and then at the start of this year we sort of saw insane demand for stablecoin yields because the markets were dropping in traditional markets, and on-chain yields were also drying up. So yeah, that was I guess the beginning of the end, if you can call it that.
I would like to respond to your first point of view that the Tornado Cash thing. I heard that on Twitter, and actually, I just read a funny post. The guy said, "What if I do a prank? I transact some money that I mixed through the Tornado Cash, and then I send the money to maybe another address that I want to make a prank on that guy." So, what do you think about? Is that guy going to be sanctioned? Because I'm not very updated with the sanctions of Tornado Cash. I'm just raising a story. I wonder, maybe we can talk a little bit about that. That's funny, guys, in my opinion. Because when it comes to sanction, are they having a very complete set of valuation or guidelines whether to sanction which one, or every address coming out of Tornado Cash has to be sanctioned?
I think it's quite onerous, right? I'm not an expert here, but maybe another point that I would actually divert and raise is the fact that we have a proliferation of stablecoins. I think the stablecoins has sort of seen one of the biggest product market fit in crypto, and in some ways you could argue from first principle perspective that the adoption of stablecoin actually leads to more centralization. But this may be for another debate.
Actually, John, to your point, right? I think.
Yeah.
Sorry.
Go ahead.
I think there's some people on crypto Twitter who actually did that. If I'm not wrong, they actually sent a little bit of money to some addresses, some well-known addresses, that is.
Yeah. I wonder if they finally get sanctioned or not, if it's because it's a prank. Yeah.
So like, I just wanted to add on that as well.
Sure.
So like, this is essentially like Tornado Cash dust attack. From what I know in terms of exchange wise, they will like in the very beginning block this address through, say, for example, third party software, like, say, for example, chain analysis or other compliance software. So essentially, I guess like gives you a warning on the back end saying, oh, it went through the Tornado Cash, but they will just sort of like I guess like manually check it in terms of whether these addresses will be I guess like blocked, or it's just basically through dust attack. It's case by case and also I guess it really depends on which exchange you're talking about. But yes, like a lot of addresses got I guess like dust attacked on these Tornado Cash thing as well. Yeah.
Thank you, Minion, for clarifying the facts. And actually, I would like to move on to the next section because Edmund, I think Edmund is interested in exploring and discussing more about stablecoins. And DeFi definitely an area which Edmund is very familiar and also experienced in. So I'm gonna just raise a question for Edmund. So wait a minute. So can you share your thoughts about the fundamental values of DeFi and its growth in 2022? Because I think most of the DeFi protocols, some of the DeFi protocols actually showed no value at all. Some stayed in 2022, for example, lending and borrowing. And maybe can you share with us your views towards what's actually valuable in the space in terms of DeFi?
Yeah, happy to. I think maybe like to sort of lay the stage right. I think a good thing is to sort of like flash back to like the start of 2020, sort of this cycle. We saw the arrival of the pandemic and the lockdowns as well back in like March 2020, where we had that pandemic-induced crash. And then, as Prof and Branson sort of like mentioned, like we sort of saw the largest expansion of central banks' balance sheet globally in modern history. And the fact that markets quickly recovered, even though, businesses were shut down during lockdowns across the globe, we saw like valuations even in traditional markets go a bit crazy and wonky. And then what followed was, I guess, a global COVID-induced bull market, and then that started with equities and tech stocks. And then, in the summer of 2020, we saw a proper adoption of smart contract-enabled blockchains like Ethereum, and that was through the rise of DeFi through yield farming. So food farms became the in thing, and then yield farming became like the norm for DeFi. Like that was what we were associated with. And during this period, like the term like Ponzinomics was very popular to sort of describe projects launching tokens with inflationary emissions. So that the aim was like provide these yield farming rewards to draw in the user. And at the same time, we also saw like I guess the role of interoperability and composability between the DeFi dApps that we have on chain. But that like with that sort of like adoption and product market fit that was found through DeFi for chain like smart contract enabled blockchains like Ethereum, we did see a like record activity on chain. And you can just pull up a chart of like the median gas prices on Ethereum for let's say like 2020 to the current price, like current time. You'll see that there would be like two peaks, right? One DeFi summer and then one at the start of 2021, and I guess throughout the whole year of 2021, and then slightly a small dip at the start of this year, and then gradually like I guess gas is quite cheap now in terms of Gwei. So more and more users became onboarded on chain. So they learned different like cryptography concepts like public key, private key, setting up their own first like crypto wallet through MetaMask, then aping the coins through like decentralized exchanges and yield farming on I guess money market protocols like Aave, right? So at that point in time, like we saw that product market fit there. Whether or not like there was fundamental value in it, I think it's quite difficult to say or argue. Like you also have to come out with like a working definition on what do you exactly say, like what's the use case there. But then we did see like, people were transferring on chain, gas prices were extremely expensive. And then as the price of ETH hit through like all-time high, the chain was incredibly congested, right? It was expensive to transact. And then you saw the rise of BSC, like DNB chain, that provided that cheaper, lower cost alternative for people to participate on chain in DeFi activities. They become like the go-to smart contract enabled chain apart from Ethereum. And if you see the stats, like I think on average, at its peak, the number of daily active addresses were more than 2x of that than on Ethereum itself. And it also became a lot easier for people to on-ramp and off-ramp through exchanges like Binance. So there was a reduction in the barriers for new users. So at that point in time, you could say that people were starting to take notice of the opportunities on chain and find crypto. And at the same time, like I mentioned, like we saw a huge proliferation in stablecoins as I guess a dominant tool to onboard not just normies who might not want to denominate their net worth in BTC or in ETH, but also like interest from institutional money looking to capture opportunities in this new, I guess, emergent asset class. Then you can see like the mainstream adoption gravy train was in full force by then, right? Like I guess at the start of 2021. So you have like MicroStrategy and Tesla holding Bitcoin on a balance sheet. Then you have large funds allocating towards crypto. And then even like Mark Cuban became a degen youth farmer and then getting back in the process through Iron Finance. And you saw like the way that there was an exuberance in 2021 where centralized exchanges were printing money left, right, and center, and then they had all these fancy sponsorship and celebrity endorsements. And then to cap it off, we also saw a country in El Salvador sort of adopting Bitcoin as well. Now, with that in mind, like we sort of also then see many different layer 1, layer 2s become very popular as a result of number one, like the high gas fees on Ethereum, and also mercenary chase for higher yields through all the different liquidity mining programs that these new protocols and blockchains were incentivizing new users with. So cross-chain bridges became extremely popular as more of these like roll-ups and blockchains were introduced, and they needed a way to communicate and operate with one another. And just to give you a rough idea on the scale, right? Like if you look at polygons, like proof of stake, like ERC20 and ETH combined, they have seen like a combined worth of $40 to $41 billion worth of volume flowing through it, just based on our on-chain data so far. But then, like with the added complexity of cross-chain functionality, like you also saw more and more exploits. Like we saw a lot of different cross-chain exploits and so on. And then with the DeFi, sort of experienced that throughout 2021. But then like middle of the year 2021, like we saw like NFTs sort of becoming a sort of main, like I guess you can call it the real mainstream adoption was taking place through NFTs. And you could argue that the product market fit for NFTs were more evident than, let's say, DeFi. At that point in time, like if you look at the total NFT marketplace volumes, right, they reach a peak of 560 plus K ETH per week. So that's about at its peak like $1.7 billion worth of volume per week in the middle of 2021. And even now as well, like you still see like volumes being quite healthy there. But then as Bitcoin and Ethereum sort of failed to reach its all-time highs, the yield started to dry up on chain, like stablecoin yield. So more and more like so-called like smart money participants, they started to de-risk towards the end of 2021. And because of that, they sort of sought out less volatile returns through stablecoins, like farming stablecoins. And then in came, you have like Terra Luna coming to the rescue with their algo stablecoin USD and Anchor protocol that sort of promised them 19.5% interest on the USD deposits, right? So while the rest of crypto markets were hitting the gradual decline at the start of the year, like Terra Luna became like a huge outlier. And that they debunked the trend basically in the first half of the year. And then we came to May, and then we saw the collapse of USD and Terra. I think if you look at it, like shadow liquidity on the curve pools that were regulating the one-to-one peg of USD and other stable coins on chain, so led to like for us, like we say like 7 wallets, but several players were trying to arbitrage this vulnerability. So then they caused a subsequent impact of USD, and that led to the eventual collapse of Terra Luna. Now this was like a bear stance moment for crypto in general, because the Terra algo stable was very popular, not just on chain across the ecosystems, but also off chain, where borrowing and lending and OTC deals were done in USD. So overnight you have an ecosystem with, I guess, TVL of more than like 20 billion at its peak wipe out. And that was just the start of the ripple effect. So we saw like true contagion, like sort of like disintegration and this contagion spreading to like stake ETH as well. They saw its packs of being deviated from that one-to-one pact with Ethereum, as people sort of migrated their wrap state ETH from Terra back to Ethereum. And that sort of caused like increased selling pressure. And then we saw on-chain as well, like amongst the largest liquidity withdrawals of stake ETH from the Curve pool, like 3AC and Celsius, they withdrew a combined $800 million worth of liquidity on May 12th alone during that implosion. And the irony is that on-chain, the largest stake ETH withdrawals from the liquidity pool on Curve came from 3AC, Hodl, and Celsius, all of whom have collapsed and sort of become insolvent, right? So yeah, then the contagion spread to public listed companies like Voyager, who filed for bankruptcy after 3AC collapsed and defaulted, and yeah, like then we hit a crisis of confidence, right? I think now truly like this kind of question arises mainly because we are at a stage where you have the collapse of FTT, Alameda, and the bank run of FTX, and then Genesis happening as well, and now like concerns about many other players sort of being affected by the contagion. So to answer the question, like, I think long story short, DeFi is probably like the main, I guess, use case or product market fit, in my opinion, for crypto in general, or for smart contract enabled blockchains at least. Like we won't even go into the topic of like Bitcoin as like hard money. I think that's probably like the best product market fit of blockchain as technology, like it being money itself. But yeah, in terms of DeFi, I think it serves its purpose. I think it's still the crash and sort of like the implications of the contagion as well. Like a lot of it involve centralized entities off chain. So if we were to sort of draw a few like lessons here, I think number one, like on chain data like doesn't lie. I think if you look at the on chain data, a lot of it you would have seen the warning signs, but I think a lot of people just chose to ignore it, especially when times were good. And then secondly, I think when it comes to a public and anonymous blockchain that we have, especially for a smart contract enabled blockchain, you do need some guide to lead the way, because a lot of the transactions and the addresses are anonymous, right, in their own unique hexadecimal values. So attribution labeling would be very important, and contagion is real. I think when you have more complexity being introduced in the crypto system through like DeFi and like different like composability instruments, this will mean that contagion will continue to be an issue. So like risk management and prudence is key. I think that's something that a lot of people neglected, especially when times were good. I think a 2-year bull market would probably have already like skewed a lot of like people's perception of how things are in general. And if you combine the high dimensionality of DeFi with generalized blockchains, and you add that together with a non-linear relationship between like big actors in the space, in the sense that someone like SBF from Alameda can come up with huge returns, it could create like an unsustainable dark forest with potentially like individual users like myself and you on the losing end. So yeah, and then I guess the role of like self-custody, like not your keys, not your coins. People start to realize that if you don't actually hold your own assets in your own wallet and stuff, you're sort of giving away the trust, which is extremely precious, right? Like when you're putting your energy into holding the asset, the last thing you want to do is I guess rely and trust the middleman, and that's something that I think a lot of the centralized entities and players in the space were painfully reminded of. I'll stop there.
Okay, just one question for me, Edmund. So, Edmund, sorry. Would you say that DeFi market participants are efficient in a way?
No, I think maybe that's like a no, yeah, they're not efficient, right? I think that's why a lot of the push is towards like so-called capital efficiency and trying to introduce more and more leverage into the system. I mean, we see the case of like Maple Finance with under-collateralized loans and stuff, or even in algo stables, right? Yeah, it so far has ended up badly. I think partly because number one, there is no standards or like for transparency and also risk management to begin with, and yeah, yeah. So the short answer is yeah, there's no no that's the answer, and probably like it should stay that way as well. At least in my opinion, yeah.
Thank you very much.
Yeah, actually, Edmund mentioned something about the problems with lack of transparency and also centralization. And I think the implosion and also the crash of these institutions has raised a lot of concern from in perspective of governments. And that would be another thing that I would like to discuss with you guys, because I think Edmund, I think Branson has he is from the Blockchain Association of Singapore, and then I think maybe Branson, would you like to share with us some of the views that that you have towards working with government in terms of crypto?
Yeah, sure. Thanks, John. I think overall, if you look at all the incidents that have happened, I think I guess there's a lot of quote unquote trust in some of the, I guess, characters as well as centralized entities, right? And the reason why I say that is because there's a lot of idolization of certain people, and that brings to the point that you should don't trust but verify, right? But unfortunately, a lot of people have done a lot of virtue signaling, and therefore that kind of helped them get away with a lot of stuff. So that is point number one, and the second thing is that if you don't verify, then obviously you don't know where the yield is coming from, and like to Ed's point, 19.5% or 20% sounds very good. The question is, where is it coming from, right? So I think those things caused a lot of turmoil in the market. But coming back to regulations, I think regulations as it is, I think at the end of the day, if you look at, I mean, there are two sides to the coin, right? I think from the consumer protection kind of an angle, I would say that's good. But at the same time, there's also the other side, which is, how much is enough, right? Or are we going overboard with certain regulations? So that is the fine line that I think a lot of, at least governments are trying to sort of, walk, right? And it is difficult, I would say. And what is enough and what is not enough? And unfortunately, all these events have caused a lot of, I guess, regulators to sit up and sort of come back with, I guess, I hope not, more scrutiny is good, but at the same time, I think we should be measured and not create a knee-jerk kind of a reaction where, okay, since everything has gone to dust, then let's hammer all the regulations. So I think that's the worry that I have personally. But I think most of the jurisdictions should perhaps, I mean, it's good to look at it, but at the same time, to understand what went wrong. And in the first place, is it crypto's fault? Or is it that it is the person's fault, right? Or is it because as I understand, there are talks also that, fraud is fraud, right? It doesn't matter whether it's in crypto or whatever, right? So the question is, let's not, what was that term? Let's not throw the baby out with the bathwater, right? Or something like that. But let's understand what went wrong. And then from there, be very measured in terms of some of the regulations. That's my point, yeah.
I think we have also seen a more increased number of interventions from the government. And
maybe I see a few words, John.
Sure.
I don't know whether the people can remember Occupy Wall Street. The whole
I haven't heard that. So maybe you.
People are just so unhappy with what is happening in Wall Street. That's why they go and occupy Wall Street and crypto, and it's move online. That's the crypto movement. Crypto movement is about a case where we have a market where a few centralized organizations take advantage of everybody that is in the market, right? That's something that we should never happen. So government really don't trust the financial institutions, and therefore they regulate them very tightly. So there's no conflict of interest, there's transparency, there's traceability, and so on. And then we open up a market to invite the same group of people with the same mentality into this area called the crypto finance. And there's no rules. They can exploit people as much as they like. So, and with technology, that is faster. So that cannot happen. That's not what crypto movement is about. Okay. And you cannot have regulation where there's technology. You must regulate very tightly for all the Web2. We must go for very tight regulation, because you want to exploit the consumer, you have to be under very strict regulation. And therefore, just now we talk about what are the major events. All this will be forgotten in the future, but there's one thing that we never forget, which is the sanction of any privacy coin, or the sanction, because this is what the crypto movement is about. We want to create a new economy for DeFi. And thank you, Edmund. You have given a very very good review of what happened on the year. And from your review, we can all see that we are supposed, DeFi is needed, and there's a lot of contribution. Eventually in the metaverse, it's only DeFi that will work. There's nothing else. It has to be DeFi. It's a very important experiment that has gone wrong because not many of the right people are in that space, right? We open up a floodgate for the Wall Street thinkers to come and exploit all of us and destroy our own crypto economy. That is my conclusion. And how do we counter all this? First of all, we should call for strict regulation for Web2. That is what we should call for. But we are not supposed to subject to Web2 regulation, because we are supposed to be Web3. Web3 is about no regulation. We are creating a different tracer. We function in a world that we don't trust anyone. Since when that we have a trusted third party that give us centralized exchanges, and then have the DeFi that we have the trusted? So the premise is all wrong. We are trying to create a crypto economy, not a crypto finance of Wall Street. We are trying to crypto economy that we don't trust anyone, right? So we got to go back to the basic that we do not trust anyone. And remember, if you try to create a new currency, and if you are regulated, they will close you down. And that's why Satoshi Nakamoto used the software to bypass a legal entity that nobody can close it down. So have we forgotten everything that we learned in history? Why are we here? We are here is because we want to create a better crypto economy, not crypto finance. So DeFi is important, but not the way that it has been for the last 3 years. DeFi must change the entire way, which, like Edmund was saying, we have to change it, like Branson was saying, we have to not trust anyone. Okay, not trust anyone. We must provide the service for people who hold on to private key in case they have dementia, in case that they have accident. The key is still there. Because what comes with the crypto economy, where we can create our own currency, don't get me wrong, I'm anti-money laundering, I'm anti-terrorist financing, I'm anti-human trafficking. But what we are trying to create a crypto economy is that one day an alien will come, right? And then take over everything that we have in CBDC and everything. There's no privacy protection. We cannot do anything. All human race is gone, right? Or a malicious element that take over a big country like China, right? And there's no privacy protection. That is the real reason why we're having the crypto economy. That's the reason why we're experimenting with DeFi. That's the reason why we're looking at liquidity pool. That's the reason why we are looking at diversification. And therefore, no public blockchain should say that I'm the only blockchain. We should promote all private blockchain and be inclusive and have work on the interoperability. Okay, we can either have the Definity type that, we can build the blockchain within the same standards, the same interoperability, or we have to focus on every blockchain is a node, because blockchain is about inclusiveness. Blockchain is an experiment. So the last 3 years of what we have described, which actually Minion was talking about, all the events that happened this year, we'll forget. All the FTX, we'll never remember them because they're not important. They're just a blip in the economy. Like all the FTX, all the Luna, we'll forget about them. Okay, but the one about sanction of privacy coin is the major event that we must remember, and we will remember for a long time to come, because our job is to create a crypto economy that we trust no one, and yet we can trust the technology that we have. So we have to go back to the basic. We must promote DeFi, but it must be in the right way, not the way that we have done. So that's what I have to say.
I think Professor Lee has given us a very good point on the future direction of the evolution of future DeFi. And that, I also agree to that. I think we need to change how DeFi is being built in the coming days. And that's one very good point that I want to appreciate it. So I think we're running out of time, but I also want to explore the last topic with you guys. That is the SocialFi. That is actually a new concept in 2022, because we have not seen something exponentially, exploding in the crypto community. So when it comes to SocialFi, we have just the news that Elon Musk purchased Twitter, and Elon Musk is definitely a crypto enthusiast. And I think he also likes NFT a lot. And so I think, Minion, I think you will have a lot of interesting thoughts. And maybe would you like to share with us your views towards the future of SocialFi regarding maybe integration of NFT and that kind of stuff?
Yeah, sure. Love to share on that as well. So I guess like a bit of a short story on that is, I was in New York NYC for the NFT NYC. So this year, so essentially, sort of I guess like first-hand experience on like SocialFi, NFT-Fi whatsoever. So I've seen a lot of like Web2 traditional people interested in terms of the I guess like SocialFi elements on say for example NFTs. Leveraging NFTs to conduct, say, for example, token-gated community, and like around the social elements around it. And there's a company called Shopify, which essentially integrated with the token-gated, NFT-gated community. We're essentially bringing a lot of like I guess like Web2 users towards Web3 from the NFT part. So like around the NFT part is like say for example Twitter, they natively integrated with the NFT as a sort of toolkit for you to say for example to showcase your NFT on Twitter profile, and a bunch of other things, say for example around I guess like social elements where you can chat. You can essentially, I guess, like showcase of your tickers, say, for example, like the blue tick on Twitter. So like slowly, there are a lot of like two different elements around SocialFi, right? So one is essentially bringing, I guess, like traditional people into the game. The other is more around Web3 native SocialFi. So like first part is essentially looking around, I guess, like how do we actually make an easy path or easy integration to suit all those like Web2 users' needs, and also giving them a very unique experience. So Shopify being an example, and also Twitter being another example as well. The other part is essentially looking around Web3 native. So how do you actually fit into the Web3 native social elements? So my, I guess, like PFP right here, it is also part of the sort of process or part of the solution as well. So like I'm trying to be, say for example, I'm trying to be a non on Twitter. And even though I'm not really a non, but like it's part of the Web3 game. So where I usually don't really say, for example, showing my face, on conference call, but here we go. I use the Pudgy Penguin as a sort of virtual, I guess PFP, virtual 3D elements. So where I can interact with a lot of people around here, which showcasing, I guess, the Web3 native way of SocialFi as well. I guess like the last part that I want to add is essentially SocialFi is a huge sort of sector. I would say like not only including the Web3 or the crypto native people, but also welcoming the traditional sort of, I guess, like people into the game as well. Take an example, Lens protocol, and also one of the other protocol for Casta. It's essentially trying to build out that sort of the Web3 or Web 2.5 SocialFi elements based on the existing protocols or existing technologies, so on and so forth. So yeah, I think like SocialFi, I'm super interested in terms of the SocialFi itself, where I can see the SocialFi elements can be integrated with a lot of other part in our daily life. Not only say, for example, with interacting with the traditional platforms, say, for example, with Twitter, but also interacting with the DeFi application as well in the future. So I guess that's my view. Yeah.
Thanks, Minion. In fact, actually, our researchers think that in 2023, Twitter might be the catalyst for an explosion of SocialFi in 2023. And I'm just raising point and see if you agree to that or not.
Oh yeah, for sure. I think like if you're talking about mass adoptions and also more people using the SocialFi, it has to be coming from the sort of the greater audience itself. So meaning coming from the Web2 existing platform where they have network effect, bringing people on board with, and also giving them a very unique social experience around Web3. Yeah, so totally agree.
Thank you, Minion. Yeah, I think we are now a bit overrunning, but I think all of you are cool with that. Let me just wrap it up. I would like to thank all of you for joining the conversation with me and Ben today, especially David Lee. I appreciate you reminding us of the core value of the DeFi and also whole crypto, our purpose, and that's really one important reminder for all of us, because I think sometimes we are just overhyped into the speculation and also the fancy thing which are being marketed by those maybe wash it wolves, I would say. But let's get back to the fundamental, and also let's not lose our faith in the purpose of doing the crypto stuff. And also I'd like to thank Edmund for giving us a very comprehensive summary of the outlook of DeFi in 2022. That's a very good sum up. And thanks, Branson, for telling us the perspective of regulators when it comes to tornado cash sanction and the prospect of integrating crypto with centralized authorities. And that's very insightful. And also thanks, Minion, for sharing with us your very cute avatar, and also very cute, I think, and also your views on the NFT and also SocialFi. Thanks, Ben, for hosting with me. And any questions for you guys?
No, thank you for having us.
Thank you very much for having us.
Thank you.
Thank you very much for coming.
Thank you.
Yeah.
Thank you.
I hope you enjoy the stream.
Drop us a message if you want to come to our stream again in the future.
Yeah. So last thing. So let's not forget to check out our Huobi Research, the annual report. So it's available on research.huobi.com. It's actually on the top of the list, so you can just click it and reveal the whole research paper. Is very comprehensive, and it's actually very rich in content. So you get to know what happened in 2022 and our predictions in 2023, and a lot of in-depth analysis powered by Nansen as well, because they provide us with the data. We really appreciate it. So yeah.
Yeah, John, I want to congratulate you for this report. I think I read through, very informative, and it's very good. I urge everybody to take a look at the report. Thank you for
thank you.
Yes, the report. Yeah.
Thanks.
Thank you.
So yeah, that's the end of today's AMA, and yeah, really hope you guys enjoyed the conversation. I personally enjoyed it very much. See you guys next time.
See you.
See you.
Minion, we should meet up later.
Oh yeah, for sure.
Yeah, Minion is in Hong Kong, and he is my ex co-worker here. He left Huobi.
Hey, good night, guys.
All right, good night.
See you next time. Bye.
Bye.